Good morning, everybody. How is the morning starting for everyone today?
I got sun at least today.
I have rain.
We had rain for the last couple of days.
Good morning.
Good
Good
morning.
morning.
Nice and sunny in Illinois.
Yeah,
There
good.
you go.
60 today.
You know what? The great thing about this is every morning everybody gets a weather report of every region in the country
Yep,
in the
including
first 2
London.
minutes. All right, except for London.
Yeah. Well, you can
It's
always tell
always,
when the weather's nice there, you can hear the birds chirping because he has his windows open.
yeah, funny.
Yeah,
Well, it's been an active 24 hours.
always.
Big boy came out and reported earnings.
Yep.
Big surprise on the earnings per share. Revenue was just above expectations. So, what will it do to markets today?
A beautiful
We'll
thing.
see.
It will be
A
interesting.
beautiful thing.
It would
We wouldn't
it'd
want
be
it the other
nice.
way. If it's the other way, then it'll take down the market.
Well, like Mark says, it isn't where it opens; it's where it closes. But I think we're starting to see some tides turning a little bit. But
Well,
anyways, go ahead, Mark.
it's interesting because the NVIDIA posted their earnings and obviously the market thinks it's good, at least so far in the futures. And then a court came out and blocked Trump's tariffs. It's the U.S. Court of International Trade, and it ordered tariff orders to be vacated on reciprocal tariffs. And so I was watching it late last night, and the market popped up 500 points on the Dow, and now you can see we're at 72. So it at the time, they haven't even changed CNBC. 300 points as a court block stroke. Now we're down to 64. So, again, it's not how it opens, it's how it closes. Of course, the NASDAQ, you go look at what's happening with NVIDIA, it's pulling up the Mag 7s. So when the Mag 7s go up because of market cap, you'll see the S&P and the Qs go up. We'll see if that lasts through the day. Who knows what news comes out left and right. And it's just been that kind of a market. So again, that's the news out there. But the Dow has really come down quite a bit since I've gotten up this morning. But anyway, I didn't listen to that. We'll talk about NVIDIA when we get done here. If anyone listened to the conference call or has comments and thoughts on that, definitely. Let's take a look here. Let me pull this up. I can get my machine to work here in the morning. Here we go. Oh, okay. Hopefully this is up. SPY. You can see we're going to open. Take that off of there. Cancel. We're going to open a little bit higher. We closed right below the 9 yesterday. We're going to open a little higher. We're still above the 200. The oscillators are still flattish down here on the SPY. We have the resistance right up next to the Bollinger Band up here on the top. So again, sideways pattern, got a gap down here. We haven't filled yet. And we'll see where we go right now, with the mags looking good, following up on NVIDIA. We'll see what happens here. But again, it's how it closes, not how it opens. And we're in a news situation every single minute, and we'll see what happens. The Dow closed, we have resistance. It's been following right along resistance. Today we're going to jump up a little bit. And this was as of probably 45 minutes ago. So now this has come down a lot. So kind of disregard where that's at. That's where it was supposed to open. But again, we've been fighting off the 200 here and the intermediate resistance level. And the oscillators again flattened out, heading down. You can look at the histograms here, and we'll see what happens in the Dow. It's not, it doesn't have the tech flavor that the S&P and the Nasdaq 100 have. And then here's the Nasdaq 100 Qs. We've been following again. This line of resistance is this bump with the tariff news and NVIDIA enough of a catalyst to move sustainably our price action above resistance, which we've been hitting, okay, for several days. And again, we've got some sell orders, 534.71. We closed at 518, so we got some room. We're going to open up a little bit. Again, the oscillators look flat to down, but today can make a difference to pop it up. We'll see. A lot of times we'll see these pop up, go up to where the sell orders are, flounder around and come back down. But it's going to have to get through, resistance on the Qs for sure. Gold. Again, gold just kind of scattered all over, but in a sideways wide range scattering pattern. You can see it just following the Bollinger Bands, which are, parallel and sideways, which means, sideways trading pattern until we see something move off gold. Gold just kind of moves. The market will be up, gold will be down. It had a nice run, but it's kind of hit, some resistance. Bitcoin. Bitcoin's playing right around the nines, trying to keep up. It's still touching the 9. We'll see what happens. You got a Bitcoin conference going on. We're seeing a little loss on the MACD. But again, we go up, we go sideways, we go up, we go sideways. That's been the pattern of Bitcoin for a while. It hasn't really lost its market structure like some of the indexes have and some of the other stocks have. But we'll see what happens. We're 108.6, so we're right, around where the previous high was, at 109 before we broke through. And we'll see what happens. They're having their Bitcoin conference today, I think is the last day of that. We'll see what happens. JD Vance spoke yesterday. So it's getting a lot of senators and congressmen talking at this conference where, a couple of years ago, everyone just kind of ignored it. So anyway, NVIDIA, let's take a look. So NVIDIA, last time I looked, we're going to open, we've been playing around resistance, and this earnings is a catalyst. It's going to bump us, and it's going to bump us above where the sell orders are just right now in pre-market. We'll see what happens when the market opens, but it's a pretty good bump up on NVIDIA. So it looks like it's going to gap up, so we'll have a gap. We see if the MACD turns around, but for everyone who's been in NVIDIA, and in the long-term holders, it looks like it's going to be a good day for you. So this indecision sideways is now going to pop up a little bit, and we'll see how it plays out during the day. But again, pre-market is not generally an indicator of how things will end up, but it's a good start for NVIDIA. Of course, all the others, the Meta's going to open up a little. We're still, in Meta fighting resistance, below resistance. We got below the 9. We're going to open up a little bit, but still, below the resistance levels, and we're still seeing, the falling off of the oscillators down here. But we'll see what happens. It's again, we're playing a news game, and now we're playing with NVIDIA. And NVIDIA is a strong stock and a good influencer, especially in the mags in the tech sector. Tesla's been, doing very well. It's got over the 9, over the 200, and it's been rolling between. Basically, it's support at the 9 and the Bollingers. We're going to open higher today. We closed right here. We're going to open higher on Tesla. You got some sell orders above you, about 375.51, but resistance is pretty high up here at 414.59. So Tesla's had a pretty nice run. It's over the 200, and you don't see that the crossing over like we've seen on the oscillators on some of the other mags. That'll probably be reversing around, today. Apple, had got hit with the news on the tariffs. 25% tariff on Apple phones that aren't made in the country. Dropped it down. We popped back up. You see, Apple's going to open up. Come back above the 20 and the 9, and just under the 50. You got some sell orders pretty tight right above it at 208.91, but we're well under the 200, which is right where resistance is for Apple. So, after earnings, it dropped, came back up, then the news hit. And again, sporadicness in the market structure on some of these stocks. We're not seeing the smooths up, sideways downs. We're seeing gaps, gaps here and just the way it's been moving. So again, market structure for me, hasn't returned to normal like we've been used to it. Google. Google, after Google had this big old red candle, it's really had a nice run up, got above the 9, finally, was playing with the 200 for 3 days and finally closed above the 200. Be interesting to see if it can hold that. We're going to open up above, but Google, is now a candidate for a watch list. If it can hold this 200 and gain some more momentum, look at the oscillators, don't look too bad. So, if you can open up, follow this Bollinger Band, sell orders are right up 179.86. So Google's had a nice little turnaround from their bad news earlier. Microsoft's, rolling right along resistance, going to open up right about where it's been before. Just been sideways, and we'll see what happens, but it's got to get past resistance. You see this 9 comes up against resistance, and a lot of times we see that squeeze the price action down. We do have a crossover on the MACD on Microsoft also. Let's look at Palantir. People like Palantir. Palantir is kind of like Microsoft. The resistance level is right about where we're opening. You see we closed just a little under the 9. The 9 came up, hit resistance. You can't see it. Oh, there it was, right there. And then popped down below. We'll see what happens with Palantir today, but it looks like it's gonna open right on resistance, and we'll see. But again, it's a lot of sideways movement on Palantir, and MACD's negative. The RSI, the momentum's still good, and then you got kind of a flat stochastic. So again, I don't see much excitement in Palantir yet. Again, look at the Bollingers. Bollingers are parallel. Lack of the volatility that we need to move it up or down. So something's got to move it, and it doesn't look like the news on NVIDIA is really moving Palantir like it might be moving some of the mags. We look at some of the momentum stocks. We had 8 on the list, and the only one that's still left is Paul's GEV without any kind of resistance level. The rest of them we talked about. RBRK resistance came on last night. So you see we had a nice run up on this between support and the Bollinger Band, and now you hit resistance. You can either play it like resistance doesn't exist and keep trying to move it up, or these lines do mean something. At least to me, this would be a place for me, not financial advice, where if I was in this, I would probably take some off the table just because of this resistance. But with 7 out of 8, so 88% of the list found that the intermediate resistance level has come on within 2 days, and you'll find out a lot when you're playing the upper levels of these momentum stocks. We're gonna look at on our watch list QUBT. QUBT it does have resistance. It has sales. It's been bouncing between the 9 and the upper Bollinger Band. You still have some pretty good oscillators down here. So would have been nice, to get in. And I would have, waited till earnings, and then I wouldn't have got in here because it's outside the Bollinger. And as it pulls back in, I like to, when I look for entry points, I like to go closer to support. That's why I like some of these charts where it bounces between support, and resistance on the Bollinger Band. You see a lot of that on QUBT. So, always try to get a better price down here and then ride it up. If you can do that, I try not to buy at the top. Most professional traders do not buy on the Bollinger Band or outside the Bollinger Band. You want a better price so you make more money on the upside. When I look at, we looked at the Dow yesterday a little bit. And let me pull this up. Even with markets the way they are, let me pull this up here. I've got hundreds of charts that look like this. And here's Disney. They're hitting resistance. You've got the 9 coming up. We'll see what happens today, on some of these, but again, it's sideways, and then you see it start to come down. You're seeing the oscillators come down like this. Okay, it might be different today because of the Mag 7s, but I can just go through. There's, Disney, here's Cisco, same thing. As of yesterday, here's Broadcom. It's been sideways. Now, resistance was here. It did move up a little bit, but it's again, we're hitting between resistance and support at this point. Are these levels on a swing trade that I would want to get in? Not for my trading guidelines. My risk tolerance isn't that strong. Here's Rockwell Automation. Okay, same thing. And I just have, there's ADP. Here's NASDAQ. Honeywell is Bob's stock. He's trying to, we're getting closer to the 9 to the resistance level. And, a lot of times that'll start popping down. We'll see. But you see that sideways pattern. You're seeing, again, market goes up 700 points the other day, and we still see this. So, when I went through the list, there's Train. Okay. Here's ServiceNow. Same thing. And from all different sectors, here's State Street. This is financial sector. And here's healthcare, HCA. This actually hit, then popped down under the, we see the oscillators pop down under the 9. Waste management has had issues at the resistance level. Again, Cintas, Datadog, under the 200, having trouble on the resistance, got the 9 right up next to it, starting to roll over a tad bit. Truist Financial came up, several days, 7 days up, couldn't do it. So I guess, here's Goldman Sachs, the Gap, retail. So here's Arthur J. Gallagher, again, more financial. You've hit here, 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 here. Imperial Oil. So oil, it's just an interesting market with what we're seeing in the structure and what we're seeing with the news. Here's Micron. Okay, sideways. So, these technical indicators are really showing us, based on past data, where we think the market will go. And it gives us an inference of where we think. Are they always right? No. But if you have a system and a process, you follow that system and a process because it works more times than it doesn't. And so I look at support and resistance. I look at moving averages and I look at oscillators, and I make my decisions based on those, not on speculation. And that's what technical analysis is. And are you right all the time? No. But for the majority of the time, technical analysis is going to be your friend. So anyway, Trent, over to you.
All right. So little sense of optimism here. Dealer Gamma, which is market makers, went positive this morning. Yesterday was negative, but it's gone positive. And what that means is that when it's positive, it is Gamma represents the price movement of Delta, and Delta is for every dollar move in like say the S&P 500. Delta represents that percent or that dollar move within the underlying option. And gamma represents the rate of change of that delta. And so when gamma is positive, it increases the risk reward factor in the delta, which is a link to the underlying asset, which is in this case the S&P. So last night we saw market makers or dealers go from a neutral negative gamma yesterday to a positive gamma. That's optimistic. Here's let me bring up my S&P chart here. And so this is the S&P 500 E-mini futures. This is what you see on CNBC every morning. And the thing, we got when the tariffs came out on April 2nd, was it? Yeah, right in this area. Market makers, as you saw a sell-off, market makers were forced to buy S&P futures. And so that sort of in a way is sort of a breaker when it comes to volatility. We saw volatility spike. And then as we saw this pop up starting back in April 23rd, S&P started moving higher and market makers are then forced to sell futures. And so what it does is sort of it tampers the volatility of the underlying asset. The challenge is that the S&P in this particular situation has a lot of headwind because of this mechanical mechanism within market makers. And you're starting to see more positive gamma, which increases the risk reward factor of the underlying options or future contracts in these options. So in a way, we've broken through the 200. That's positive. We've broken through my intermediate trend line, my trade trend line. So we're trending higher. But something to take into account is that that momentum is sort of dampened a bit because of the mechanics of what a market maker has to do. So as you can see up here, 6,000 to 6,100 is a bit of where we have seen sellers in the past, going back to February 19th and back also to December 17th. So this is a barrier that has to be breached for the S&P to go higher. Take into account, you've got also this mechanical mechanism within market makers that is sort of suppressing that potential pop higher and that reward higher or vice versa. So when you're looking at this is more and more I've gotten focused on what that market maker is forced to do every day and the wall that once was support like here or is support here right around on the S&P around say 6,544 and the resistance are right around 6,100. And so once we see more of a positive gamma on the market maker side, we can see possibly a fueling of that upward trend. But as we know, headlines move this market. Structural, systematic investment funds are now net buyers of the S&P in general, which is great because it starts to push the S&P higher and the underlying assets. Yet, if you look at the percentage of stocks below the 200-day moving average on a daily basis, or above the 200-day moving average, only 40.23% as of today are above that 200. And, as Paul Tudor Jones has said, and that's his big indicator is, if anything below nothing good happens below the 200. And so for roughly 60% of the stocks in the basically equity world are trading trading below the 200-day moving average. Only 40% are above. So to get this shift to start happening for a bullish point of view in the overall equity market, we need to see at least a break around 45%, if not higher, around 50% to get this momentum to go higher. So this is what, from a more of an intermediate term perspective, I'm looking at and going, to get all boats to float higher, you've got to get the majority of them moving higher. And so this is one thing I discovered on Trading Views is you can look at the percentage of stocks below the 200, but you can look at the more seasonal element of this. And basically this tracks the years where stocks were above or below the 200-day average. And I thought this was interesting because you sort of start to see a pattern here. Back in 2020, roughly only 20 or 32% of the stocks were above the 200. 21, that was a negative 46%. And then it started inching up to more of a positive to where you hit 2023 and you saw a 70% of the stocks were trading above the 200. And so we're sort of in this area. In 2024, it was 21%. No, it was 80% were trading above, if I'm reading this right. So we're sort of in this phase where right now we have 40% are only trading above the 200. The question I have is, are we in the phase of moving from 2020, 2021, 2022 now into 2023? Are we like say 18 months to 36 months out from a move up where the majority is moving higher? And so this is sort of like historically looking at this going, we may be in this sort of neutral or inflation kind of environment where the majority of stocks are going to trade below the 200, but we're going to have a market where it's sort of a neutral environment for a while, and we're just going to sort of bounce around. And as volatility fluctuates, we'll see potential trade opportunities. And I think this is where you have sort of two gears or three gears when it comes to how you invest. When markets, the majority of stocks are above the 200,
Want some
that's more
news?
of a long-term point of view. Okay, that's a long-term upward trend. But when their stocks are below, or the majority are below the 200, then you have more of a sort of a bearish to neutral position. And I honestly think when I look at the VIX, we're in this chop bucket, and we're going to vacillate between the F bucket and the investable bucket for a while because of headlines, because of the news headlines, this kind of thing. And I think we're going to just have this chop, which creates greater opportunity from a trade perspective, swing trading. It's going to create some opportunities. And I think if you put all this together in your toolbox, you're going to have a better idea when risk is high and risk is low, and when to enter a position and when to exit a position. But until we see the majority of these companies in the equity world get above the 200, we're going to be in this chop area. And that creates if volatility bounces around, this is what hedge funds and algorithmic trading funds want to have. And so it can be a benefit in an optimistic side of things for us as investors. But from a long-term standpoint, we have to be risk managed because that chop can turn into an F bucket really fast, as we've seen with news headlines and this and the other. And I honestly think we're in the beginnings of the drama of news headlines that are going to drive this market. And so keep this in mind as you're investing and build this into your risk management process. But right now, what the option market is telling us, and this, as we've seen, day to day, this changes, but we're in sort of this neutral to risk on, risk off kind of period in the derivatives market. And that forces the market makers to make decisions based on where stocks are going. So I believe to sum it up, we're in a basically a tampering of volatility because of the way market makers have to hedge their books of business. And that's going to create more chop in the market, and headlines are going to drive a lot of this until we get some positive rate of change movements quarterly, year over year for a lot of these big companies. And we get a lot more of these companies trading above their 200. We're going to be in a very stagnant kind of environment, but it creates opportunity from a short-term trader perspective or swing trading perspective. So that's what I got today. That was the scientific thoughts running through my brain this morning. But I think it's one of those things it makes you a better investor, both short term and long term, if you understand the mechanics of how this money is moving through from a global standpoint. All right, let's open it up to the floor with questions and comments and charts.
Patrick's back. We haven't seen you in a while, Patrick.
Yeah, I'm a bit scarce lately.
I know.
But just following up what Trent has just said, those two indicators, the VIX and the 200-day moving average, I've been looking at them on bar charts, and I looked at them over the last 5 years, and the sweet spot seems to be for the VIX between 12 and 17, and for the 200-day moving average, the optimal is about 55%.
Yeah, so we're sort of close.
Yeah. So it could take another month, between 2 and 4 weeks before we get into that optimal trading sort of environment.
Yeah, I think one of the biggest factors though in all this is these, delayed in negotiations or decisions with China when it comes to tariffs. Now you got the, court ruling on reciprocal tariffs. A lot of this is really hinging on headlines. And if I read the headlines right, NVIDIA basically said because of this restriction with China, this sort of dampens their, I guess, ability, correct me if I'm wrong in interpreting that right, but China's going to do whatever they're going to do. They're going to make it happen, one way or another. Is
Yeah,
NVIDIA involved or not?
yeah,
So,
the federal government are about to announce something important about semiconductors because they produced a report about 2 months ago and they were due to publish it last month and haven't. And it could have an effect on semiconductor prices because because it could prevent people from exporting from Taiwan.
interesting.
I can always tell when it's a nice day in London because I can hear your birds chirping.
Yeah, that's because the FT is up today. Everybody's happy.
Oh,
That's
is that the
good.
indicator?
Anyway,
All birds are happy, right?
there's just two other things. Palantir may be gapping up today because Fannie Mae have enrolled Palantir software to reduce mortgage fraud, and that was announced yesterday.
Oh, interesting.
Oh,
We'll have to
wow.
watch that.
And
Tom,
also,
maybe that's a catalyst to get it past resistance.
yeah, and then Rolls-Royce, the Korean Navy and the Canadian have just signed contracts for engines for their frigates and their ships. So that could have an effect too.
I didn't know Rolls-Royce made ship engines also.
They do, yeah.
Oh, interesting. I know you brought it up and just, with a week or so ago, Trump was over in the Middle East, and I think one of the countries signed up for 200, Boeing planes, and of course that helps Rolls-Royce. And now with that contract, that's nice too. And then you've got, General Electric, who also makes engines, for planes too. So they're starting to see a little bit of that. Maybe some of those orders coming through and helping out their stock prices too. So interesting.
Yeah, Trent, sorry, Trent, but Mark, you asked me about the Alzheimer drugs that are.
Yeah. What'd you find out?
I did a bit of research and found that there are 2 drugs on the market that potentially will delay the progress of dementia, and they're called Donan, DONAN, and the other one is called LECAN, and it ends with EMAB in both cases. So donanemab and lecanemab, and they the donanemab is made by Eli Lilly and Eisai, EISAI, and the lecanemab is made by Biogen, and they reckon that the projected market in the next 4 years is going to go up by 293%.
Wow.
Yeah, so I think watch those 3 companies because they've got potential growth.
Good. So are those approved drugs right now? Or are they in some kind of testing?
They're approved. They've been on the market for some time.
Okay, interesting. Thanks for looking into that because
Right.
I certainly didn't know that.
Yeah.
So
Quick question. Does anybody know what happened yesterday to Candace Design Systems? This is one of Kerry's stocks, CDNS.
I had my weirdest.
CDNS?
Yeah.
There was in the news yesterday how software won't be able to be sold. So types of software can't be sold to China. That's why it was down 10% yesterday.
Yeah. Okay. It's bouncing back. It's up at 294, but yeah, that was big. But if you look at it, it was once again at resistance level.
Yeah.
Yeah.
Yeah, it went up. It was hanging right along where the cells were, and then boom.
Yeah.
Yeah. I don't.
But looks like it's still
earnings.
above the 200.
Yeah, it didn't quite get down there. So earnings are positive, dollar per share back in April. Yeah, Cadence. And that's just one of those unknown market conditions you can get, sideswiped by, news coming out. And just now, we got so much news that just affects the entire market up or down. It's really uh, uh, it's really an interesting time to try to be trading
Yeah.
and investing. So, they talk about uncertainty, and that's, the market doesn't like uncertainty, but when you think about it, the market's full of uncertainty every single day, no matter what's going on. So at
Right.
some point,
Well,
so that's just what we got to live with.
Well, it looked like on your chart there, the green line of death was just what, 10, $20 higher or something like that?
Yeah, let me pull it back up. It's at 308.58, but you have these big swings like this, and that can mess up your charts pretty easily.
Yeah.
We'll see what happens. We'll see what happens when it pops back up and what it just moves tomorrow. But definitely these big swings, candles like
Yeah.
this are just, whether they're going up or they're going down, they're just
Yeah.
hard to
Well,
chase.
take into account like the algorithms see this and it draws down that fast, but that 200 probably is a buy if it gets close to the 200 percentage level, close to 200 buy, and that's why you sort of saw it close up, and it looks like it's going to open at 294. So from a very minute to minute trade, those algorithms are saying if it gets here, buy it, and it once it closes, we'll push it back up, especially a drawdown at 10%. That retracement, probably of half of that, is really possible. So it's really just a really short-term trade, but it's interesting how the algorithms work and think. So it could be a quick trade.
Yeah, they're also looking at this 50 coming up. Well, Golden Cross looks like the 200, so they're looking at that. And those are two big lines of support right next to each other. So it take a bit to blow through that. So that's why you're, gapped. You got a little wick and then it came back up. You said it's at 294 now?
Yeah. Yeah.
Which is
Pre-market.
right up in this area right here. So it's pulled back within the Bollinger Band. Looks like today,
Yeah.
the lower Bollinger
Yeah.
Band. So, yeah, definitely. I want to talk a little bit, about NVIDIA and what you guys think. And I know Scott's in it. Scott, what do you think? Happy today? Look at that smile on his face.
Oh, yes. Oh, yes. Faith paid off. That's all it was. A little luck and faith. No, really, seriously. The big boy on the block. A lot of planning. A lot of, what are they going to do? Except grow.
Well,
Seriously.
yeah. I mean, yeah, no, totally. I mean, they're the dominant player in their whole field, and that's nobody's really ruptured that as much. Um, but Polaroid was the same thing.
But
So,
even if they would
I
have
think we're kind of
dropped,
far from Polaroid.
even if they
yeah,
would
I
have
agree.
It's far from being a Polaroid company.
Right now it is. Yeah.
even if they would have dropped, it would have been an excellent buying
yeah.
opportunity.
Totally. And honestly, that it's jumped today. I don't know what I showed you yesterday about revenues and earnings per share, the rate of change of it quarterly year over year hasn't updated in my system yet, but I'm curious to see what that looks like. But no, NVIDIA, I mean, it owns the market right now. Um, Even though you got Amazon and Google and a couple of others, Microsoft, I think, also trying to build their own. These guys are way, at least probably 24 months, 36 months ahead of the game. So,
It makes a good point on NVIDIA too, that sometimes, when you get resistance like this, it takes a catalyst to move it fast. And in this case, it's the earnings that, we're going to open somewhere up in this area. Now, where we close, I don't know, but, because you do have sell orders, but we'll see what happens. But it takes a catalyst to move it one way or the other. And sometimes it's earnings, sometimes it's, news that comes out, whatever it is. somebody's buying or selling the stock. But again, this is going to be a catalyst that moves NVIDIA up. And NVIDIA had if we go back just 6 months, that didn't do me. Let's go back a year just to see the ride that we've been on with NVIDIA. We're still, it came about. We're about back to where we were in February. Okay, so February it really took that dump, and it took February, March, April, May, almost June to get back to to even. So it's been quite a ride for NVIDIA the last at least this part of the first part of this year. So
What was their revenue? Does anybody know what quarterly revenue? Does anybody know off the top of their head? No.
anybody?
See if I can look it up.
Yeah. So are you going to look at percentage increase
Yeah,
quarter over quarter?
that's what I'm trying to figure out.
I think the big takeaway is that in NVIDIA's earnings represents solidification that AI is just getting stronger. It's
Oh,
just getting
absolutely.
more ensured that it will be part of our. It's like the next revolution, the new car, the new blah blah blah. It's the next thing. So it's how we manage what companies are going to do well. It makes me excited because opportunities are going to continue to form everywhere. So anything that's tied to NVIDIA, you got to research and understand, but it's only going to grow.
It's
So,
definitely the king in that space for sure.
but
Yeah.
it's the space now. Like it's the like if you
Well,
say
AI is.
what's the disruptive sector, it's the space right now.
Well, you
So
see
yeah,
it. AI in general. I think you're in the second inning of a 9 inning ball game with AI and how it's revolutionizing all of this. And I think NVIDIA is sort of at the heart of it. So, but
yeah,
it's interesting what else will bleed out from this. They'll create opportunities like software and that element. I still believe cybersecurity is a big play
like well, you
in
get the
this area.
SoundHounds, the Navitas, you have the A. I
Yeah,
mean, ever see their list of all the stocks that are tied into the infrastructure NVIDIA? It's like large, very many companies. So it's like
yeah,
when NVIDIA says we're beating earnings, we're growing, we got orders like there's no tomorrow. All of those companies, it's like a ripple effect. Every one of those big companies grow as well. Now figure out which one's going to grow more. CRM, Salesforce did a big. It has an AI agent now. I mean, they had an AI agent, but they reported in their report, they also mentioned AI as a growing place. And also,
yeah,
you see 3P AI too. It's another thing. AI. I don't know. I think it's C3 AI. They reported some good stuff last night too. Stocks up 12% or something. But it's just
mm.
resupporting everything. That's what I see. It's like a symbol of like, this is here. It's coming. It's growing.
Well,
That's
it's
why I
sort of
think
like
it's
the
Definitely.
bigger.
internet.
Yeah.
When the
Yeah.
internet came about, it stalled down and became a foundational element of how we do things in the world. AI is, the Henry Ford and the assembly line that changed manufacturing. This is one of those other things. It's now we're in the infancy of it, but it's a part of our lives today. And if you don't accept it, you're going to get left behind really quick. Um, but yeah, I agree. It's just now how you think about just like all the evolutions of these big turns in technology and how we are as humans or have grown throughout history. There's always somebody through the front door first. It's like how long do they last? And I think that's one of those things that as this chip manufacturing innovates faster and faster, you're going to have more players come into it. And I think that's where that's where NVIDIA runs into headwinds, is when Microsoft and Google and Amazon say, wait a second, we don't want to pay those prices anymore.
Yeah, I know.
And they start developing their
I,
own.
I
But
know.
it's
I know what
time.
you're
It's just a matter
saying.
of time.
Yeah, I know what you're saying. I know what you're saying, but that is not like given the infrastructure that they have in place. I personally don't see how those big players are going to come close, are going to have even
like
1 year, 2
ever,
years. I don't
like
see it.
ever.
Like, not, I'm not going to say ever, because ever's a long time. I'm going to say I
Right.
just don't see it like on the horizon. AMD's the closest to having a chip or a software structure that's somewhat nearby, but they're not even in the same ballpark.
I
So
don't think
like,
Yeah.
I don't think AOL saw it in the internet either when they were the leader.
yeah, when they're,
No.
it's the same story. We are where we are right now. AOL is
Exactly.
where we are right now. So it's
Yeah.
just
Yeah.
but like yesterday was a AI still powerful. It's
Oh,
still
Oh
yeah,
yeah.
coming. It's
definitely. Yeah.
still
I mean,
growing. But
it
we
didn't
couldn't
go
say that.
away.
Like if any Nvidia had missed, right, it would have been like, oh, AI could be a bubble. Like we've been hearing that AI is a
Yeah.
bubble, right? It's not a bubble. So it puts that part of it to bed.
Yeah.
The thing
Well, and
about
I think it.
I think the thing
Go-
about AI, they make products. Okay, NVIDIA does that supports the AI. I think when you look at AI on the other side, like the chat GTPs and all that, those companies are trying to learn how to monetize off that AI while they're spending on the hardware to make AI
Yeah.
happen. So I think that's where the challenge is on AI is, how do you monetize on it? From a Google and a Meta and those kind of guys.
Did you hear about the narrative that uh, graduates cannot, their unemployment is up because of AI has taken their jobs?
Yeah,
Oh
Yeah.
yeah.
uh, So
yeah.
that's
I was
You think
you
of it.
talk about monetize. It's already affecting how many people are being hired for
And
new
Well, look at
entry level.
I saw
Entry level.
something yesterday, Paul. They were talking about the number of people who will be one-person companies because they don't need HR departments and marketing departments because they can use AI as their team, and it's interesting, that's you couldn't do that, 10 years ago, but now you have the possibility of having a pretty good one-person company and making some good money off of it. And
Well,
think about it.
look.
My when I owned companies, my biggest liabilities were employees, and how much I had to pay, and their problems were my problems. It doesn't stop at the door when they leave. They come in with their problems, and they become a part of your family, and then that becomes a part of your culture. If I didn't have employees, man, things would have run a lot smoother in some of those companies. Other than I wouldn't have anyone to do the work. Now I got AI
You
can do
look
a lot of that work.
It's hard to
when
put
So
my head
When
around.
Microsoft reported earnings, they said 30% of their code now is written by AI. I mean, think about that 2 years ago. That was probably 10%, maybe. So you're seeing this rate of change in the applications that is changing these companies. And you're right. Honestly, you could start a company that does millions of dollars in business and have one or two people, one person to sell it and the other person to build it. And that's where I think the threat. I mean, you think about all the college students who are coming out of school with a degree in computer science today. Unless they understand AI, they're irrelevant. Um, they'll be relevant to a small business, but going into interview with Google or Microsoft, they got to have an edge, and I think that's where this really is coming into play.
I
And
guess I'd rather have a
now you can
computer
get that
science
edge
degree
anywhere.
than I'd
I
rather
just
come out. I'd rather come out with a computer science degree and have a shot than like a sociology degree and try to
Well,
I
yeah,
was
I
figure it
mean,
telling
you're
out.
Christine
comparing apples to
Yeah,
oranges there. That's
last
been
night.
for years.
Last night I was telling Christine they
nothing
need to
against
have a new
sociology
new
degrees.
degree, an AI expert degree, like an AI guru that can, because she was saying, well, AI is affecting accounting, lawyers, blah, be
Oh
going
yeah,
down the list.
that
But now,
definitely.
and they were saying it affects IT. Those are one of the biggest hit jobs, an entry level IT. But now you got to have, I think you have a university that provides an AI guru of some sort, a new
I'm
sector,
sure it's
like
out there.
automotive engineering, right? That's automotive engineering is a specialized. You got to have an AI guru.
I saw an interview the other day with a big attorney, has a big attorney office. He's like, I will be able to get rid of a lot of my associate attorneys because I can have a legal clerk go and do a brief now really quick, fast, or any kind of, look up laws and put together whatever they put together. And he says, I won't need the attorneys to do that, and I'm like, wow. So
Yeah.
I mean, it's gonna be changing. It's gonna be life changing for some people once it gets rolling for sure.
But we
It's
got to
gonna,
pick
Boy,
stocks.
I use an example of we signed on with a new internet company for my Ginger's studio in a new gallery. So I took the contract, dropped it into GPT and said, look for anything I should be aware of that could work against me, but also give me a summary of it. And in 30 seconds, it gave me a summary of the whole contract. And when I compared the two, I was like, can you imagine work using that tool to analyze a 100-page contract and analyzing and get into the nitty-gritty? And it's just a matter of asking the right questions for it to go seek those answers. If you hand that over to a lawyer, it'd be a month before you get any response on it.
and how much would it cost you?
Oh, like at least $2
I mean,
grand.
billable oh, more than that, billable hours. You know, you think about that. They charge you for paper and stamps and, you know, phone calls and
Yeah.
everything, you know, so
Yeah.
but the only thing that worries me about it, guys, is where is this information coming from? And is it true information it's pulling from to give me the correct answer? That's the only thing that I don't have the answer to,
So
or belief in yet.
and
I don't think a
that's
lot of
where
people care on
What?
that. You know, I thought
well
about that, what you just said. I don't think, like when you Google something, you have, you could see who the source is. You could say, and you could see the
But
credibility of the source, or you could see a bunch of ads. But now, or like you use Grok or you use whatever, they summarize the whole thing. So how do you know if it's an accurate source? How do you know if you
actually
absolutely,
can trust it or not?
with
that's my
all of them,
question. Yeah.
they reference their sources now.
But
So
even
like
with
in Claude, it literally has a link to where they got that information. So it is starting, I think that as technology, as this stuff ramps up further and further, you're going to have to reference that kind of thing. So anyways, anybody got any charts they want to take a look at real quick?
Let's see, Mike's on here. Mike, you got anything on the, let's see if he's awake. You got anything on the yields or the treasuries, Mike? He hasn't been on in a while. See if he's here. He might be drinking his coffee or I don't see him coming on. Yep. All right.
Someone wants
Well,
to look
Mike's
at
not there.
box. Some
At what?
Joseph wants to look at BOX, which is
Dropbox? Is that what that
Box.
is?
Oh, you
no,
guys
it's
like
something
you
else.
guys like these chasers, don't you? Yeah, they came out with earnings. Yeah, the earnings spike.
I don't know what they do.
I don't know either. Here's the chart. So my question, Joseph, is what's your question? You have a question on this one? I mean, I look at that. I mean, are you going to buy it there? I'm not.
Well, it's outside of the Bollinger Band. It's a gap up.
Huge gap. I
So
mean, let's see what
yeah,
let's see what the earnings were. Earnings were 2 cents per share. Okay, I don't know anything else other than that on this. Yeah, that's a big gap outside the Bollinger, way outside. I mean, this for swing trade and for discipline that I use with my trading guidelines, this would have been a man. First of all, I wouldn't have been in it because of earnings, because it could have went the other way. This is one where it went right. So if you were in it, stayed in it, you got a good pop today. If I get something like that, man, I certainly, not financial advice, I would certainly want to take something off the table. Let's just go back a year and see how long we've been. See, it hasn't been at this level for a while. So if you've been in this stock, you just kind of hit a home run today, yesterday. And I look at that and say, man, I would get, for me personally, the way I trade, I would get my money back, at least my principal. And if you like the company and you believe it's going to go up, let the house money ride on it, if that's what you're trying to do. Anyone else got a comment on that?
I would do some understanding of exactly what the attraction is here, so and see if you agree with, get some conviction from that. That's something's driving it up. Understand what it is and make your own decision.
Box's valuation is stretched. Its PE ratio is 148.
Wow.
Its competitors 28.
Yeah. Yeah, 2 cents per share. So I don't know if they came out with a new product because 2 cents per share. on a $36 stock. I don't know. It's again, I go
Research.
back and I go back and I look, let's go 2 years. It'll let me do it. Okay, so that's even in 2 years, you were at the high right now. And if you were waiting, I mean, look at the zigzag we've had. This is like pulling the slot machine and you get some money back, and you put that $100 you started with in your pocket, and maybe you keep playing. It's like
Mark,
Paul said. Go ahead.
take a look at the behavior of it going back to, what is it, February 1st, 2024 area. You saw that gap up there. It peaked out,
Yeah.
came back over time, filled it. It gapped up again at the earnings. Was
Yeah,
it
here's another earnings here.
324? Gapped up, went sideways over, I mean, there's a long period of time, but filled that gap.
Here.
This gap here, filled it
This
here.
one didn't though.
Is
This one was
box?
5 cents a share. It dropped. Yeah. Here's one. This was $1.12 a share. It dropped. It's kind of all over
Yeah.
the place.
Yeah.
I don't know what they
But-
do. I just know this is a pretty good high on a long chart.
Yeah.
Why
Historically,
did
if
it
you
jump
look at
like
it,
that?
earnings.
Well, I don't know. I don't know. Joseph, do you know? Is it Joseph that
I
brought
mean,
this up?
Box is it's basically selling toilet paper and things of that nature, right?
Oh,
That's tariff bump, maybe.
I know why then. Because Bob, you went out and you bought all that toilet paper a couple weeks ago.
Okay.
Bob, you're
I
supposed to be in
I
Florida
didn't know you
today.
bought that much.
I'm coming soon, Trent.
How are you?
Oh, I'm headed to Savannah tonight or today.
All right.
You gotta let me know.
All
Huh?
right.
Oh,
All right.
it's
Well,
a
we've got
couple.
about 3 minutes before market. 4 minutes, 3 minutes.
You
So-
Where do you
know,
want me to put this
I don't know
filter
if
up,
did you
baby, in your
guys
office?
talk
In your
about
office?
Can you shut that down, Trent?
Yeah, I did.
Okay.
did you guys I'm sorry, I stepped away. Did you guys talk about WhatsApp? I know App Lovin'. This morning it was upgraded. It was upgraded to $600 by Citibank.
Oh, wow.
Yeah.
Might be late to
Yeah,
the
it's-
party.
I don't know if that's a good
It's to open at
analysis.
$400 now.
But I heard that they just upgraded to 600.
Wow.
I take those analysts with the grain of
I
salt
agree with you,
myself,
Mark.
but-
I'm just curious, what the
Yeah.
feedback. I mean that stock just keeps giving.
The
Yeah.
thing I like about it is even when it came down and hit, it didn't get, it got support on the 200, so,
Yeah.
it's got
Yeah.
a little room. You got some cells at 414. We'll see what this analyst, maybe it might pop it, but, my experience when I was in the business of analyst going to these funds and things where we would go, and get their order flow, that there's a hallway, and one side of the hallway has a door that says trading and the other side says analyst. And the traders will go yell across the hallway to the analyst, say, hey, we're going to buy XYZ. Can you do a report on it? And so they buy XYZ, and then the analysts come out and say, hey, XYZ is going to go to 600. Oh, thanks. That happens a
Mhm.
lot. That happens a lot.
So the story out there is the Fed has lost control of interest rates. We're back above 7% now for mortgage rates. And several talking heads are starting to say that the Fed has lost control of the 10-year. Thoughts on that?
I think they're less relevant than they were. I mean, think about how the narrative, the news, we used to look at remember for a year, we're like, what's the Fed going to say this week? What's this report coming out? Now we don't even talk about reports. I mean, PCE comes out tomorrow. Who's talking about that at all anymore? Nobody.
Yeah.
Right?
Because if that's true, we're, we're we could go 8%, right? Pretty quickly, sorry, based upon, the spending, this bill that they're coming out with, the spending on that bill is pretty large. The rating has been downgraded numerous times. They're talking about it now, but it was downgraded prior too. So I don't know. I'm a
I,
little concerned about that.
I think if you look at the U.S. Treasury market and the 10-year sits at 4.46, that's a move up from April where it was down. April 4th, it was at closed out at what, 4%. That's a big move, and that means
Right.
everything that we borrow money
Yeah.
against as benchmark is that's a form of inflation. And so now you have an inflation factor, and we're at basically support where the 10-year is now. Resistance is at 4.7. So if we see a move upward towards 4.7, that means it costs us more every day to live.
Right.
And I think that's where you create that element of stagflation, if not recessionary. Flip that over to Japan. In Japan, it's 40-year dropped. Today it's at 3.13%. But it's that whole carry trade that has been going on for a long time that's starting to unravel. And so you couple that with the US dollar and all this other stuff. I think the Fed, if they do what if they were to do what they probably should do, and that's raise rates to dampen inflation, it would be a negative on the markets. If they lowered rates, that would be we're in a problem area. And so that would be negative on the markets. And so they're just really in a corner where if they, whatever they do, they're screwed. And I
Yeah,
think you
remember
throw in
though,
the political side of it, that's a whole nother element.
the Fed only controls the short end of the bond cycle. They don't control the 20-year area. That's totally
Yeah.
controlled elsewhere. I mean, they deal with the overnight rate to banks. Okay. And it might affect the 10-year a little bit, but those are more controlled by the big guys, the big investors, and what they're telling us, Bob, and this is my thought, is that look, all you countries, not just the US, get your fiscal house in order, because if you expect
Right.
us to buy your bonds on the long end, and that's a high risk, we're going to charge more. We want a higher yield for that risk because we're going
Mhm.
out on a risk curve. That's what you're seeing in Japan. That's what you're seeing in the US. I want more money to go, 20 years or 10 years out there, to take that risk because we don't think you're going to be able to pay it back. I mean, that's what's happening, in my opinion.
Right. Right. If rates really start to jump up, even higher, which brings us back, I believe, to the 80s, right?
Yeah, 70s and 80s. Yep.
Yeah, because I remember back then it was crazy. But anyway, if we jump up, that's going to really have an impact on the economy overall. My last
I remember,
comment. Go ahead.
I remember the 80s when my dad was an accountant and he was getting CDs for 18%,
Yeah,
just rolling them over. If
same
you had
thing.
money, you were
Yeah,
rolling them.
30 days. 30
Yep.
days.
Yeah.
It was crazy. It was phenomenal. Made so much money then. My
If you
last
had money, if you
conversation,
had money.
exactly,
Yeah.
um, is MicroStrategy.
Yeah.
There's been a lot of chatter out there about 100% leverage on the Bitcoin and its stock. And a
Well, it's
lot of
definitely,
people are starting to throw up flags. Should Bitcoin take a dump, there could be some issues with MicroStrategy. Any
that's
thoughts
always
on
that.
that?
Yeah, that's always been known though.
Yeah, but he's got a bigger piece of the pie because how much he owns. He owns
Right.
like 8%, right, of the
Yep.
market.
hmm
Big number, right?
Well, he doesn't own 8%. They own under 2% of the total market of Bitcoin.
Okay.
So
They're
I, I,
saying,
I
I
yeah,
don't
I
know
mean,
if it's true or not, but I'm in it. So I'm trying to assess if I want to continue down that road.
Yeah, and I think it's a concern, the way I look at it, I think his average cost basis is $69,000 per coin. And we're at 109 right now. So the studies that I saw is it would have to get down into the 30s before he would really have to start selling off to pay off, what he's doing to buy this. And so if
Right.
you believe that, I have a pretty good cost basis in MicroStrategy. So no way do I want people to go out. You got to know the risk that's happening in a leverage play like MicroStrategy, and it's brand new. Okay. But since he
Right.
started doing this in August of 20, his stock price is up, over 3,000%. That's the best.
Right.
That's better than NVIDIA. NVIDIA in the same time is only up 800%.
I'm
So
not knocking it. I just,
no, I know you're not, Bob.
yeah, I'm just,
Yeah.
I
So
get,
I mean,
I
it's
get
like everything.
concerned when I start, 100% leveraged, that's,
I mean, don't you have
Well,
to
I
look
mean,
at it the same way you would look at any company? I mean, the fundamentals, the technicals, like take away, it's dependent on
yeah, but you're
Bitcoin.
talking about 22 times, 30 times, but this is 100 times.
well,
Mhm. I
he does several things. He'll go out and sell his shares at the market and buy. He'll go out and he'll get preferred shares at 0%. So he's basically getting money for nothing in exchange for a convertible. He's got all kinds of different vehicles that he's out trying to get more Bitcoin. And he's leveraging the fact that he believes that over time, because of history, Bitcoin goes up on average, 60% a year. That he's borrowing at 1% and he's putting it in an entity that's making 60%, and that's the whole feel of what's he trying to do. Now, like Trent said, you can look at the charts and get in and out. You can see where we are on a daily chart, in
Right.
MicroStrategy.
Yeah.
And it goes back to it's certainly. I'll go to weekly. It's certainly something that if I were in NVIDIA or any stock, that has the opportunity to be volatile.
I'm not concerned about volatility. I know all that. I'm
Yeah.
just concerned about, thinking about the bond market and everything. Should the bond market take a dump, right?
I think if
You
the
know,
bond market takes a dump, that Bitcoin's, when you look at Bitcoin, I mean, here's MicroStrategy. You look at where it's at, it's, on a weekly chart. This is weekly. Okay. So it's still, above
it's
the
above the
support level.
resistance. Yeah.
Yeah. And so let's just go to Bitcoin for a second and take a look at Bitcoin. The thing that I notice about it, and I spent a lot of time on Bitcoin and thinking about this, and obviously, and not financial advice, but here's the weekly on Bitcoin. When the stock market, was going nuts and it was out of control, it was all over the place. Bitcoin remained steady. You saw, you know, it going up, and it went through these lines of support, resistance. It got to all-time highs up here, and we're not losing it, at least on a weekly, which I like to look at for long terms. We go to the daily. It'll let me go. There we go. Wherever it went, do this. Come on. Bitcoin's just playing around the 9 right now. But again, here's where your support is down here from a technical point of view on where you find resistance and support on price action. And so again, it goes sideways, up, sideways, up, sideways, up, sideways. And until I see that change, I'm seeing a little bit on the MACD, but it's still it's hung in there pretty well, Bob. I think when you
All right.
compare it to the SPY. Let's just go look at the SPY. And I look at the SPY, and I'm going to go out 6 months here. It didn't do this, this mess here.
Yeah.
It stayed pretty
Yeah.
well. And so, that's when I started, and you and I talked about it, and I'm not saying it's decoupled from the market yet, because I don't think it has, but
I don't think it
I
has.
think it's trying.
And that it's trying, but that's the concern, right?
Yeah,
If it
exactly.
didn't, if we have an issue, then it's not decoupled and strategy would fall.
But I think if the bond goes down, I think more money will be going to gold and Bitcoin as a store of value.
I would agree with that. And there's a lot of money flowing into Bitcoin and other coins.
Yeah, and the thing about Bitcoin is only 21 million, and there's not that many left out there in the open market. So, if you believe in supply and demand, you know, if the price of oil goes up, what do? They drill more oil until the price comes down. Well, you can't make more Bitcoin. That's one of the things that I like about it. Okay, and that's me, not financial advice, but I've studied it a lot. And it's volatile for sure. And Bob, you've been in it, and you got ripped off on it.
Yeah.
Not because of Bitcoin, but because of other
No,
things.
because of crooked soldier.
Absolutely. I mean, it wasn't a security issue with Bitcoin itself. It was
No,
security.
it's
Yeah.
it's just people that are scammers, right?
Mhm.
That's the
Yeah.
problem.
And that
can
happens.
happen. That can happen in anything.
That
right?
can happen in a bank. People
Yeah.
lose their money in banks and stuff too. You're right. Yeah.
Yeah, never use your debit card.
Yeah, exactly.
All right, guys, I
All
gotta
right, good enough.
pack up and head to Savannah. So
Have fun.
But you have a great
Uh,
trip, Trent.
thank you. Yeah, picking,
Bye, guys.
moving a
Tomorrow's,
daughter out.
I can't believe it. Tomorrow's Friday already. So,
You just got a raise,
yeah.
Trent.
What's that?
You just got a
Oh,
raise. You're out.
yeah, at least for a reprieve for about 3 months.
Is she gonna
Oh,
stop
is she going to
eating?
college or what?
Yeah, she's
Okay.
just finished her junior year. She'll finish up a
Oh,
year from now.
Okay, you took a pay cut.
Yeah. Yes, Bob. I took a pay cut.
All right.
A very big pay cut. But the first one that I sent there is doing very well, 4 years out of college, and she's in the top 5% of earners in the country. So
Wow,
I
good
feel
for
like
her.
I got, yeah.
Good.
So Emma, I think has the same kind of drive, and I think we'll see the same. So we'll see. They're productive, good people. And that's the end goal in raising
Yeah.
kids.
So have a
So,
safe trip.
See you tomorrow.
all right.
guys.
We'll see you guys tomorrow.
Sounds
Tomorrow
good.
morning.
Y'all
I'll be
take
in
care.
Savannah.
Take care.
Bye.
Bye.
Yep.
See you guys.
Live loud.
Thank you.
All right.
See
Thanks,
ya.
Patrick.
All the best.